Hello, good day, guys. My name is Nick, technical analyst with SuperForex. Today, we shall be looking at the technical analysis on the currency pair, the New Zealand dollar to the United States dollars. And as usual, first, we shall be talking about fundamental analysis before we move right down ahead to technical analysis, which is going to be purely what we'll be seeing on the chart. The RBA surprise move and lowest comments suggest that they believe the economy will bounce back quickly from the current lockdowns. And the New Zealand dollar has been up sharply on Wednesday after the Reserve Bank of Australia surprised traders by announcing its willingness to keep the September taper plan on the table. And as expected, however, the RBA held its benchmark interest rate and bond purchases unchanged, despite the growing economic threat posed by lockdowns to deal with the coronavirus pandemic. At 0.456 GMT, the New Zealand dollar had been trading at the 0.69770 zone, or let's say about plus 0.50% ahead of the RBA announcement later in the evening. Some investors felt that the central bank policymakers may be forced to walk back their plan to begin tapering its bond purchases announced on the 6th of July. And RBA Governor Lowe has expected to put off until later the year plans to scale back weekly bond purchases while keeping the cash rate at 0.1% on Tuesday. That was the view of the large majority of 18 economics surveyed by Bloomberg last week. And two of them went a step further and flagged the risk of the bank also extending its 3-year yield target to the November 2024 bond. Instead of walking back its plan, the RBA board stuck with its plan to start winding back purchases of government debt to $1 billion a week until at least November. And now the news caught short sellers by surprise right now, forcing them to aggressive cover and sending the NZD USD pair sharply a little bit lower. And the RBA Governor Philip Lowe said while the national economic recovery has been stronger than expected, the recent lockdowns will probably result in a GDP, gross domestic product, contracting in the September quarter. Economists are expecting the September quarter national accounts to show a fall in GDP due to the impact of the lockdowns, which have hit Greater Sydney, Queensland, Victoria, and Southern Australia over the past 2 months. The experience to date has been that once virus outbreaks are contained, the economy bounces back quickly prior to the current virus outbreaks. The Australian economy had considerable momentum and it's still expected to grow strongly again next year, Lowe said. Now, the economic outlook for the coming months is uncertain and depends upon the evolution of the health situation and the containment measures. Now, down to our technical analysis, looking at the daily forecast. We have the main trend is up according to the daily swing. Now, picking our crosshair indicator, we can easily spot this out. Right here on our 4 hours time frame. Taking our crosshair to a 1 hour time frame. Now we've seen an overall daily swing of support and resistance, building up a major support zone at this point. And then earlier in the hours of the morning, we have the uptrend kicking off and then this little pullback, respecting this major resistance at this point. But nevertheless, we are expecting an uptrend for the market. A possible breakout from the zone will definitely put the market right above the resistance point, making it look out for the next resistance point, which is somewhat at this point, for a possible target to the 0.71 zone, which means a confirmation of the upside. So therefore, if we were to make an entry to this trade at this point and let our trade run onto this next resistance zone at 0.70569, we should be seeing up to about 50 pips from this trade, which is good money. And an extension to this point, we are seeing about 100 pips from this trade, which is an excellent performance for the NZD USD pair. But alternative scenarios means that supposing the trend makes a reversal down, we are expecting it to touch this first support zone, which is about 54 pips from your entry point being here. And an extension to this other latest or later support zone means we're getting up to 95 to 100 pips from this trade. Of course, alternative scenario, but we are expecting an upside to the trend. And also because we are foreseeing an increase in the interest rate later this evening for the NZD currency pair. So probably having an entrance or rather an entry at this point and letting your trade run up to this point and also to this point. You should be racking up nothing less than 100 pips from this trade, which is very excellent entry point and good money. So that's our technical analysis today on the currency pair, the New Zealand dollar to the United States dollar. I remain your host, Nick. Bye for now.